Hello everyone. You're welcome back to my channel, and tonight I'm just gonna give you a brief breakdown of what's happening on Volatility 75. I posted an update a few days ago, and so let's see what has transpired so far. So quickly, last 3 days when I posted, I actually told you about the fact that price had formed this area. We had price actually consolidating around this area, which would say that price was accumulating more orders within this area, and then price accumulated more orders, and it sought for the sell side liquidity below. Sorry, yeah, the sell side liquidity below this area was taken. So price actually sought for sell side liquidity below this area, and we actually saw that price took down. So below these areas, below these highs here, are actually orders. This is where we have liquidity, and this liquidity is provided by the retailers, the uninformed traders like yourself and myself. What we believe is that this is an area of we call it an area of support that price should get here, because it was bounced off this area. We believe that when price gets to this point, it will be bounced off, and then so we are hoping that when price gets here, it will be bounced off. In as much as it was bounced off the second time, our hope is that the third time price should bounce off, and that if price should break this level, our hope is that price is going to sell. Okay, so we set our sell stops, and then price triggers the trade, and we hope that price is going to sell. But rather, the liquidity here is providing liquidity for the market makers, is providing liquidity for the smart traders. Okay, so now they begin to, as you are providing sell orders here, yeah, the market is a two-way affair. One is selling, one is buying. So someone who is ready to buy must get someone to sell, someone who is selling. So as the retailers are selling here, the market makers are buying from the retailers, so they rally price above this high. I actually told you that price was going to go higher, and the premise for which price had moved was these three different trend lines here. Price actually traded high above it. So let me put my line here. You could see that this line traded above these three trend lines. So we call the trend line phantom. So price traded above this trend line here, and it took down all the others. And I actually said this area is, look at where price was bounced off. Let me quickly go down so that you could see why price got bounced off around this area, and then it came back. I'll explain the dropping and all. So let me explain what price did here and why it got bounced off from this side. So look at this area. Let me quickly shade this area, this shaded area. Let's go down to a smaller time frame and see exactly what happened on that within that area. This is the 30 minutes time frame. All right, so let's see what happened. So in this area we have an order block here. This three continuous bullish candles. This is one continuous order block. Okay, so necessarily we expect price to reverse, especially touching this body, the body of this candle. But price had an area, an opening here, which was an area of a gap opening here. So I expected price to actually trade into the gap and then be bounced off. You place your stops above this high, and then you are good to take this good trade. All right, so now let's go down to 15 minutes time frame and see for ourselves also what actually transpired within this area. So clearly you could see that there is a fair value gap in there. clearly you could see that there's a fair value gap in there. Let me quickly bring this thing down and show you where the fair value gap is hidden. This is where the fair value gap is, and my expectation was that price should trade and close in on the fair value gap up here, and nicely price actually traded into the fair value gap, into the mean threshold of the fair value gap, and then it got bounced off and then it traded down. So this is an area where price actually traded into. If you had even set your trade along this area, it would have been a good place to set your trade, because you were looking at the other block as this continuous bullish order blocks on the 30 minutes time frame. If this was the other block, if you had entered a trade here, it would still be a good area to enter. So this was the premise for which I knew that price was going to actually, so I actually set a trade here. Why? Because price had not actually, when price actually retraced from this area and got bounced off this area and traded all the way down, consolidated, accumulated more orders here in this zone, accumulated more orders in this zone, and then it took down the sell side liquidity and took the run above all these highs. Necessarily what I was expecting was a bounce back from this side, and when price got bounced off this area, what was the next move? As price was trading up, it was leaving traces. Let me go down to the 1 hour time frame. Price was actually leaving traces of areas that it's actually leaving liquidities that it will have to necessarily come back to close in on those liquidity areas. And a clear example is this area of trade. Just below this we have this nice fair value gap or price imbalance here, and not just this area only. I saw below, I saw this fair value gap, but I saw more than this particular gap. I could have entered a trade here, but I saw more than that. So I actually gave, if you watch my previous video, I gave you an entry point that it could be this area. There's a small fair value gap inside this area. Let me zoom out for you to see what I'm talking about. So this small fair value gap here was the area where I was expecting price to actually bounce off. There was a gap here. If you just be smart enough to see it well, there was this gap here that wasn't closed where I was expecting, and it was just before the order block, just before this bullish order block. This bullish order block was formed from the other block that went to sweep the low, the other block that went to sweep the liquidity. So anything that's around, any other block that's around this area is valid. And when you look at this, it is very valid that when this bullish candle was formed, this was what caused the rally to break the highs here, to break all these highs. So quickly you would accept that this is the other block. Okay, so I expected price to come trade into this and not even break it. Okay, and let's see if price actually did what exactly we're looking at. So price actually traded quickly into that other block, and look at the price didn't go below the low of this candle. Okay, so nicely price did that. And let's see where the bodies of the candles are. And as I always say, when you are looking at volatility index, always ignore the wicks. Look at it, it was nicely in the mean threshold of this candle, and it was just beautiful. So price actually traded off this area and it rallied back up. Where necessarily must you expect to exit this trade? There was another price imbalance in this area. So when price closed in on the imbalance, quickly you could just terminate or collapse your trade, and take profit from this level. So price actually was doing something really excellent, that below the fact, beyond the fact that it came to closing on this fair value gap, there was this short-term low, any term low here, which price had actually, there's this below this low and this low are also short-term, are also places where we have sell side liquidities. The market makers know that they have the retailers have placed their sell stops here, that price should get here and breaks below we're going to sell, and it breaks and they begin to sell. And what does the market makers do? They begin to buy this their sell orders and take them higher, take them out of the market. So think like a smart trader, don't think like a retailer. Okay, good. So what happens then after the market had done all this, and then you expect some small retracement? Why? Because there was some area of imbalances within this area. When you go to the 4-hour time frame, when price traded all the way up this way, left this gap here that needed to be closed in, and the price dipped into the gap and closed in on the gap. So there was some sort of imbalance here that price actually closed in on. What would have been the premise for you to have even entered a trade here to catch the move from this side to this side? Let me go down to my smaller time frame and give you more insight. Okay, so Bill Williams actually has this fractal for you to know where we have highs and lows. Okay, so let me quickly insert that indicator for you to don't say that I said I don't believe in indicators. So indicators that shows you these are not indicators that will show you where to buy and where to sell and all that. So this is Bill Williams indicators, which shows they are fractals, just showing you highs and lows. Okay, so for instance, we had a high here, we had a low here, we had a high, we had this high, it doesn't have any. So from this high, the next low that I'll consider would be this one. Okay, so if it formed a high here, low here, high, and then low, then we found the high here, which is a short term. So now where was the nearest high that was broken? So we had a high here which was broken. So this particular area was an area which was showing you that price was actually trending downwards. Okay, so from this high, I'm expecting a low before a high, so this one becomes a short-term low. So when we come down to this low, okay, there's a long-term low. Okay, then what it does, price goes up to break this high here. Okay, so it means that there has been a break in structure. Okay, then when price trades above that high, what I'm expecting is a retracement. So for instance, market has broken this structure, okay, at this level. So which structure am I talking about? I'm saying that there's a high from this point to this. Let me show you that the market was actually trending downwards. So from this point all the way to, let's say, this point. Okay, so we had market trending downwards. Okay, then what happens next? Market goes up all the way to break this high here, which is a break in structure. Okay, so from this point, necessarily I'm expecting a retracement back into. Now let's pull our fib levels and see if we have from this high to, okay, from this high to, oh, okay, from this high to this low. Let's see where the market actually reversed. On the fib level, you get a level where the market reversed, which was on the 38.2 level. But fib is not always the drawing line for why market has reversed. Okay, now let's see something just before the breaking of the structure we have here, which was where is the place where the market makers or the smart money came into the market. This area, this where we have this bearish candle, that's where the market makers began to hedge their funds. Okay, they began to hedge their funds. So here they have a lot of buy orders within this area. So now after they've taken market back up, they will come back here and begin to rally all the buy orders here and then begin to take the market back up again. Okay, so basically that's how come we saw a reversal at this point. Not necessarily on the fib level 32. Here's a good place to see and even add up to whatever is happening here. So price actually reversed on the mean threshold of this block here. So here, this is a mitigation block. It's a mitigation block. Okay, this particular bearish candle is a mitigation block, and it can also be, it also serves as an order block. For instance, like this block here, we have this down push candle here. Okay, price traded above it, it formed another block, price came to this point, traded into this particular order block, and then traded up here, came back down, formed this particular candle here, which was traded and raided, so this particular candle here forms another block. And what happens? This candle trades into the body of this candle, so this particular candle becomes more like a proportion block as well. Okay, so price trades into the mean threshold of it, and then it's being bounced off into the sky. Okay, so now, as we've seen market do all these things, what is our premise now? What is the next thing that we are expecting? Price has always left traces in the market for us to see where best we can take more orders. And one of the things that you should be looking out for is the liquidity. Okay, liquidity. Okay, so price is always taking down liquidity. So here we have price consolidating, bringing us liquidity here. We took the liquidity, we ran off with it, and then it provided another liquidity here. Market dipped into the liquidity, has taken it. So can you see the highs here? Can you see these equal highs here? Can you see that there are liquidities above these equal highs? So this equal highs becomes a target. Okay, there's liquidity above this high, there's liquidity above these equal highs, especially when you see the equal highs as a place to rather seek for more liquidity. So market is actually seeking for more liquidities above these equal highs. Okay, so guys, basically that's it. But let me go down to the 4-hour time frame and show you something that I saw here. That price could probably do that, but now my premise is not yet set on that. Can you see this? Can you see this area? Can you see this area? What can you see? Very nice. I don't need to talk about it. So guys, this is an area where price could possibly come and take liquidity from and run up with it. And can you see that now it has formed? Let me go down to a smaller time frame so that show you more of what I'm seeing here. So there are some lows here, this side. There are some lows here that necessarily I may expect price to come to do something here, but if it doesn't, we are looking at my expectation now is price is going for the highs. Price should go and take down the highs. Then from there, we know our next premise. So guys, keep learning and keep upgrading yourself. Okay, yeah, keep learning and keep upgrading yourself. So look at this time frame on the 30 minutes. We have a nice order block here. Price has left a trace here for us to see that this area is an area that needs to, okay, we should understand by now. All right, let's go down further to our 15 minutes time frame. What can you see? What can you see on the chart? Price is traded closing on all these areas and left some small signature here for us to see that there's something that price needs to do in this area. Okay, all right. So guys, that will be all for tonight. Just a quick review on what is happening so far. So price has actually obeyed, and it did exactly what I said. If you could watch the videos again and again, you would understand that price actually did exactly what we expected it to do. Right. So wish you all the best. As price is breaking above these highs with a bullish, if it closes as a bullish above this high, it's formed a nice OB in this area. Okay, all right. So guys, I have another review on volatility 25 and volatility 50. Okay, so I'll come back to that quickly, and then I'll get you updated in no time. So I wish you all the best in your trading. Please subscribe to my channel and give me a like if you like the video. If you learned something from the video, just give me a like. Okay, I have a Telegram page you can join as I share a few ideas here and there and few signals here and there. All right, wish you all the best. Have a blessed day. Stay focused.